Views regarding the economy, securities markets, or other specialized areas, like all predictors of future events, cannot be guaranteed to be accurate and may result in economic loss to the investor. Past performance is no guarantee of future performance. Any information is for illustrative purposes only and is not intended to serve as investment advice or as a recommendation, since the availability and effectiveness of any strategy is dependent upon your individual facts and circumstances. Individual securities discussed may be held in accounts where JGUA and or its employees have a beneficial interest. And with that, let's get to this week's episode.
Hey there, everybody. Dr. B here with John G. Ullman and Associates. This is our weekly market update for the week of December 2nd. Thanks for joining us. And don't forget, you can always put questions or share your thoughts in the comments, and I'll do my best to respond to them. As usual, the purpose of this video is to use my background in economics to help inform you about the economy and the financial markets so that you can make informed financial decisions. So with that said, let's go ahead and get ready to hit the books and get up to speed on the markets. The first topic we're going to talk about from last week is gross domestic product. So we saw the second revision to the third quarter of 2024 GDP, and the value came in at 2.8% annual growth, which is actually the same as the first estimate of third quarter 2024 GDP. There were a few small revisions, but not enough to change the overall number. What we did see is that corporate profits, which are only reported in the second revision, actually fell in the third quarter of 2024 by about $10 billion. And in comparison to the second quarter of the same year, we saw corporate profits rise in the second quarter by about $130 billion. So things are evolving and changing in the economy, but I wouldn't say that this report or this revision was anything to be concerned about right now. 2.8% growth is still pretty fantastic in terms of the national average. Next up, we saw the Personal Consumption Expenditures, or PCE, Inflation Index report for October. Not surprisingly, we saw evidence that the fight against inflation seemingly has stalled in the last few months. We saw year-over-year inflation of about 2.3%, which is approximately the same as what we saw last month. While at the same time, the core index, which excludes food and energy because of their volatility, actually came in at 2.8% increase year over year, which is unfortunately the highest increase we've seen since April of 2024. This will come into play later when we start to reflect on the Federal Reserve and their upcoming interest rate cutting or holding decisions, as the fight against inflation is the primary reason for the high, elevated interest rates that we've seen today. We also saw some unemployment data come through. In our weekly unemployment insurance program, initial claims, we actually saw the weekly claims drop to 213,000, which is the lowest that it's been since April of 2024. So there doesn't seem to be a significant number of people initiating their unemployment insurance, which is usually seen as a proxy for layoffs. With the potential for layoffs being low, the other statistic we want to consider is the continuing claims. These are folks who have been on the unemployment insurance program up to this point and are now continuing into the next week remaining on the program, meaning they were not able to find employment. That number unfortunately increased to 1.9 million, which is the highest level that we've seen since November of 2021. So what this suggests is that workers aren't necessarily losing jobs or being laid off at a high rate, but those that are currently unemployed may be struggling to find employment during that time. Next up, we have consumer sentiment. So in line with the University of Michigan's Consumer Sentiment Report, last week we saw the Consumer Confidence Report out of the Conference Board, and we saw a similar effect with increasing optimism both in the current state of the economy as well as the anticipated or expected future state of the economy 6 months from now. Both of these consumer sentiment and consumer confidence reports have shown significant improvement in the last month. One point of note with the consumer confidence report is that we actually saw the largest gains from younger respondents and from wealthier respondents, both of which increased their confidence about the economy much more than analysts had expected. Last week, looking at the stock markets, we saw the S&P 500 and the NASDAQ both increase more than 1%. We also saw the Dow increase by significantly more than 2% in the shortened trading week. One of the important points for consideration is that on Wednesday, we saw a significant drop in all three indexes as the market continues to struggle with the potential for resurgence of inflation, with the potential for large and disruptive tariffs, and with the potential for a change in strategy coming from the Federal Reserve as they continue to fight the inflation while balancing unemployment concerns at the same time. We continue to watch Bitcoin as the price changes are exceptionally volatile, and a lot of analysts expect the price of Bitcoin to surpass $100,000 before the end of the year. Last week, we actually saw Bitcoin fall back down to earth just a little bit until Wednesday and Friday, when a small rally was staged and Bitcoin again continued its surge towards a $100,000 price tag. Finishing up the market report from last week, we saw the value of the dollar fall, although in relative terms, it is coming off of a significant high in the last month. We also saw the value of crude oil and the value of gold fall initially at the beginning of the week, but then reclaim some of those losses as we headed through the shortened trading week on Wednesday and Friday. All in all, we continue to watch these commodity markets as there seems to be significant volatility, greater than usual, in part due to speculation about 2025, but also in part to consideration, concern, and of course speculation about the Trump administration and the upcoming economic policy changes we'll see in early 2025. This week coming up, this is going to be a big unemployment week. It's the first week of the month of December, which means that we'll see the national unemployment data for the month of November. But it also means that earlier in the week, we'll see a few other significant reports that help to fill in the big picture of what job markets and what employment looks like in the US today. The first report will be the Job Openings and Labor Turnover Survey. This is usually released on Monday or Tuesday, and it gives us a good idea of how people are flowing into and out of the labor market. It also gives us a good idea as to how many job listings are being created, and we can compare that to the number of unemployed individuals. And last of all, it gives us an idea of why folks are separating, whether it's voluntary separation, layoff, or termination. So it helps to fill in some of the details. The second important report is the ADP Private Employment Report. This is significant because it gives us an estimate early in the week for the private sector and how many jobs have been added or lost in the previous period. It's typically viewed as a less formal precursor to the national data that's released on Friday. The national unemployment statistics released on Friday will give us a better idea of what November looked like for the job market. It'll probably also give us a better idea for October as well, given that the October report was disrupted by worker strikes and natural disasters. And so the November report might actually provide some improved clarity or improved revisions to the October data, as well as insight on the November data. The last piece we'll be following this week is any comments made by the Federal Reserve, specifically the Federal Reserve Board of Governors or members of the FOMC, Federal Open Market Committee, that work together to make interest rate decisions. Their final decision of 2024 is coming up on December 18th. Prior to these interest rate meetings and decisions, the Federal Reserve and the FOMC committee members go into a blackout period 10 days prior to the meeting. This means that as far as this week's unemployment data, and as far as any insight we might gain from the members of the committee, any thoughts, any speeches, any concerns will have to be voiced by Friday, because once the blackout period begins, no more comments can be made until the interest rate decision is released and made public. With this in mind, we will be watching this week for any indication or any insight we might be able to pull as to the direction the Federal Reserve is leaning. The question being whether they will continue their interest rate cutting phase, or, given the concerns with inflation and the drawback in concerns with unemployment, whether we'll begin to see them dial back or reduce their interest rate cutting expectations. Looking ahead to the future, this is the time of year where we start to shift our focus from what happened in 2024 to what we think might happen in 2025. Predictions and estimations will become the center of most topics of discussion. We'll also see concerns and theories mixed together to start to form speculation. The important thing to keep in mind during all of this prediction and speculation is that it's important that we follow the data. Opinions and emotions may run hot at times, but at the end of the day, the data will tell the story. And that, at least for the market update, is our focus and what we hope to bring to you. Some of the things we'll be watching as we lead into 2025 because of their impact on the economy and on financial markets are going to be, of course, economic policy, specifically around taxes and trade. We'll be watching fiscal policy as we continue to deal with the debt and deficit. And we'll also be watching monetary policy as it becomes very likely that the Federal Reserve may begin 2025 with a recalibration of their interest cutting expectations. With all of these changes having significant impacts on the economy and on the markets, we will do our best to bring you the updates and the direction of those changes in a timely fashion. Along with economic policy, we'll also be watching in 2025 as the global economy continues to evolve, hopefully looking for a recovery in Europe and China. We'll be watching, of course, geopolitical concerns, as well as conflict in Europe and the Middle East. And domestically, we'll be watching the ongoing challenges we face in both housing and manufacturing, hoping to see some of the optimism start to take shape and develop into tangible, productive efficiency and economic gains. So thank you for joining us this week. If you found the video helpful, make sure you like and subscribe below. If you have a few minutes, make sure you check out some of the other content here on our page. If you have any questions, or if you have any thoughts you'd like to share, also remember you can share those in the comments below. With that said, have a great week, and thank you for joining us.